GM. Today's lesson, I'm going to talk about psychology of your portfolio, the size of it, and some of the dangers of benchmarking your portfolio against its previous highs. So I did a lesson for my purple belts and I shared a screenshot by GCR, who's a famous trader on Twitter. Doesn't post much anymore, but he was posting last bull run. And one of the things he said was, cleanse your mind of your peak net worth. Meaning, whatever you had at the absolute peak. So there's times where you're holding a bunch of coins and the market goes up, and you're holding like volatile altcoins. You're probably holding a bunch of meme coins, you're holding maybe NFTs, and at a certain point when we have one of these big up only phases, you might see your peak net worth, and you refresh your portfolio every day, and at one point you've got like 50 grand and you started with 5 grand or 10 grand. But then of course, because the market does not go up only, and we're not over, it's not, the bull market's not over, but you have a 20 or 30% pullback, and you very quickly forget that you started with 5 and went to 50 and that this is just a pullback. All you see is, oh, I had 50 2 weeks ago, now it's at 33 because it's dropped by 30% or whatever. And this fucks a lot of people up because they think that it should just be a one-way up only, no pullbacks, and as soon as their net worth starts to drop, they need to fucking panic and sell. So first thing is, you cannot have an attachment to the money. If you it's just, look, people ask this all the time, like, what do you mean don't think about the money, focus on the process? Like, I say this stuff all the time and people don't really get it, and I understand, because it's not an easy concept to get. But if you take the logic that smart people, smart money, big money, wealthy people apply to markets, you'll understand it. So they say, don't put in more than you can afford to lose, whether it's investing or gambling, right? If you want to go and gamble in the casino, you're in Vegas, or you're at the horse racing, you're having fun, what do? Do you withdraw all your money, your life savings, and go to the track? When you go to Vegas, do you take your entire net worth with you and fucking gamble it in roulette? No. You take $1,000, you might have 50k, you're on holiday in Vegas, so I'm going to take $1,000, I'm going to have some fun gambling, right? If that's what you're into, if you want to enjoy Vegas when you're in Vegas, or you want to play the horses or gamble at the casino in your local town, whatever, you do it for fun. You don't expect to win. You certainly don't expect that you have any right to win, or that there's a system or a strategy. It's a fucking casino. It's rigged against you. In the markets, it's the same thing, except there is an expectation of return, because when you're investing, you're obviously trying to grow whatever amount you put in. Otherwise, why the fuck would you put it in? You just leave it in dollars or pounds or euros or yens and let it fucking devalue 10% a year. So you put money in, you invest. The reason why the rich get richer is because they have $1 billion. And so they could literally put 990 million into an investment, lose it all, and they'd still be able to live. They'd still be in the top 1% of the 1% of the 1% of the planet, because they'd have 10 mil. Now, would they take a big hit to their lifestyle? Sure. And that's why they don't gamble with 990 million. They put it into some investment that might go up 10% a year. And boom, guess what? They've just made another 100 mil. Right? But even if you scale it back to people who just have millions, more than enough, right? Their living expenses are 20k a month. They have a business or a cash flow of 30k a month. And they have an investment portfolio of 2.5 million. Right? Maybe they own a house, they have some real estate, they have a bunch of stocks, they have a little bit of crypto for some fun, right? They have invested what they can afford to lose. Anything they can't afford to lose will not be in risky investments, right? They might have half of that equity in a house that they own. So 1.2 million of that will be in a property that's considered, all things equal, it's like the safest investment that you can have. That's why they have the common phrase, safe as houses. So Everything has risk. Crossing the fucking road has risk. But you've low risk investments like that. You've low risk investments like bonds, government bonds, money market funds. You get 5% at the moment. So they'll put money into that. Stuff that goes into stocks, the goal is to never touch it. This is the Warren Buffett method, right? The goal is to never touch it. Buy stocks, don't sell them, reinvest the dividend, and compounding at 8% average per year, which is what the stock market does, over a space of 20, 30, 40 years, will make you very, very wealthy. The one key, as Buffett himself said, the first rule of compounding is to never interrupt it unnecessarily. Meaning, to allow your portfolio to compound, you don't fucking touch it. So, if you just understand that, then you're thinking like the rich who get richer. You're thinking like a wealthy person, because that's exactly what they do. They put an amount in that they don't need to take out for at least a fixed amount of time. Maybe it's a year, 2 years, 3 years, whatever. So first of all, do your numbers. If you're going to put even $100 into the market, it has to be money that you don't need to touch for at least a year. Then you can detach from it. This leads me to the next part. You must then detach from that money. The way you detach from it is you accept that it's gone. It doesn't mean you're accepting that you're going to lose the money, but you accept that that money is no longer liquid. You cannot just tap in and use it. It's not in dollars or pounds or euros. It's in a coin. Even though you can sell that coin right away, you must do something, whether it's just a mental trick or moving it to a cold wallet or whatever, you must do something to make it illiquid. Take it off the exchange. Put it in a wallet, and I know you can connect that wallet to Uniswap. We need a bit of fucking discipline. You have to tell yourself, when I'm buying this, it is not with the intention of selling it in 2 weeks. That's trading. That's separate. And that's why you should separate your trading from your investments. But we'll get onto that in a minute. You must consider it to be illiquid, like a house. It doesn't matter how much FOMO you feel, you can't sell your house today. By design, it's illiquid. It will take you weeks, if not months, to sell it. If you want to sell it any faster, you have to take a 40% haircut, which is dumb. Consider it the same. Because if you can't do that, you shouldn't have bought it in the first place. Because it means you haven't done enough research. If you haven't done enough research on your long-term bags to form an idea that you could hold it for a year, you shouldn't hold it at all. Now, it doesn't mean you'll hold it for a year. Maybe 8 months from now, the market's topped and you're fairly confident of that and you want to sell. That's fine. But it's the first day is when you're most likely to flip your bias and sell it. The first week, the first month, and after that, you're generally okay to hold it. Why? Because let's say you've 10 grand, okay? $10,000. That's all the money you have. And you put 8,000 of it into fucking SHIB. Definitely don't do that. You put 8,000 of it into SHIB. Now you do that in a bit of FOMO. So the very next day you think, oh, actually I need a bit of money to do this. I wanted to book that holiday. I wanted to go to this place. I need to pay rent, blah, blah, blah. You realize very quickly, oh shit, this isn't in dollars anymore. It's in a coin. And the coin dropped 5% overnight. So now I don't have 8,000. I've actually got 7,600. Oh shit. And then you panic and sell. And you've just literally handed $400 to the market for no fucking reason. So when you're buying, there has to be a long-term plan. And that long-term plan is just simply, I am not going to sell this. If you are planning in any way to sell this soon, it does not go into your spot portfolio. It goes into your trading portfolio. So if you have 10 grand and you put 8 grand into spot, that is long-term. Long-term just means I'm not going to fucking sell it. It's illiquid. It doesn't mean I have to hold it for a year, 2 years, 3 years, 5. It doesn't matter how many years. It just means I am not going to sell it. I'm not able to sell it. If I suddenly need to pay rent or pay my car, or I get my car breaks down, I have to pay a bill, or I need money for whatever reason in a short space of time, that part of my portfolio is not touchable. It's not liquid. Drill this into your head. Write it down. Remember it. It's not liquid. So that will force you to think, wait a minute, okay, can I actually put 8k into spot coins? Okay, look, I know my rent's sorted. I get my wages every month, but I need a rainy day fund. Maybe there's an emergency, so I'm going to take 1,000 of that, put it in my bank account and leave it there as an excess in case I have any sudden emergencies. Cool, good. Now, the money that you actually don't need. This is the problem again. People put their entire net worth into a coin or a few coins. And that just means throughout the days and weeks and months, inevitably, when you get some kind of financial emergency, you end up having to sell it, and it's fucking dumb. So if you have 10k, you probably have 8. Right? You got a job, pays the bills, all that. You probably need to put 2k on the side anyway, just in case life happens. So you have 8. Out of that 8, if you're going to put 80% of that into long term, that's $6,400. Right? That's $6,400. That, once you buy your Bitcoin, Ethereum, Solana, Akash, whatever the fuck you buy, that is illiquid now. You cannot touch it. It's like a house. Just in your head say, it'll take me 30 days to sell this. I can't use it. And then if you want to learn trading or trade with the rest, that's fine. If you want to enter 1 million trades a day, fucking go for it. That's what that smaller part of your portfolio is for. You're allowed to go in and out with that. You're allowed to trade your systems. You're allowed to day trade. You're allowed to do whatever. But not with the long term. This is not about a crypto bull market this next few months. This is about for life. You need to be able to imagine your money as illiquid. You have to be able to take your... This is literally just what an investment is. Most people can't save because they can't change their mind into having illiquid pools of capital versus liquid. Illiquid means you cannot monetize it. You cannot turn it into cash quickly. So if you want to save dollars, which are liquid, or you want to save pounds or euros, you want to save them long term, you have to take them out of the bank and put them into something that either you cannot or you will not sell soon. That's all it is. That's the Warren Buffett method. Put it into the stocks, right? Put it with a broker and don't touch it. Most people find that easy because the stocks are in an index, they're with a broker, and they're not volatile, right? They don't wake up and they're down 50%. They wake up and maybe it's down 2%, but the next day it's up 3%, then it's down 5%, but then it's up 7%, and over time, it all averages out. Crypto, the problem is, everything's liquid all the time, right? Your wallet's always there, you can always go on Binance, you can go on Coinbase, you can go on Uniswap, you can always sell. You can always panic and sell. Plus, you have the volatility. So if your entire net worth, every penny you have on this planet is 10k, and you put it all into altcoins, you're going to wake up someday and it's going to be 7k. That's going to make you want to sell because you're afraid it might go to 5k. The problem is you're viewing your net worth. Cleanse your mind of your peak net worth. When that money goes in, it goes in because you think that in 6 months, 12 months, 18 months from now, it's going to be a lot more money. That's why you put it in. But you have to also accept that along the way, it's going to have ups and downs. Lots of downs as well. And it's going to go from 10 down to 7. But then it's going to go to 20 and then back to 14. Then it's going to go to 60 and back to 40. And then it's going to go to 30, and it's going to go sideways, 30, 40, 30, 40, 30, 40. Then it's going to go to 100. And if you just did nothing all along the way, there's so many times along the way that you could have sold. And you didn't sell, and it all went 10x. 10k to 100k, done. The way you do it is by not looking at it. So don't check your net worth every day in your spot bags. If it's illiquid, right? If it's illiquid, if it's the part of your portfolio you can't sell, why the fuck are you checking it every day? Do you check the value of your house every day? No. You might check the property prices in your area or get your home appraised once a year, once a month to check the price rough. Get an actual appraisal once a year, once every 5 years, whatever. Because people don't intend to sell their home every day. Don't have it on the exchange because the exchange will show you your P&L. Not only is it a bad idea to have it on the exchange for safety reasons, you shouldn't keep your long-term bags on the exchange, but it also shows you, updates your net worth all the time. If you're holding an altcoin, you're holding Joe Biden or fucking Apu or one of these coins that's only on decentralized exchanges, and it's in your Phantom wallet or it's in your MetaMask wallet or whatever, don't use the app. Don't use the wallet app. Have a separate wallet app that's not on your phone. Very important. Don't have the wallet app on your phone if it's your long-term bags. Because when you open MetaMask and you refresh it, it shows your peak net worth. It shows you exactly how much it's worth right now. Don't do that. Not for your long-term bags. Put them in a separate wallet that's somewhere else. And if you want to check the chart, go check the chart. Go and look at the actual chart on Deck Screener or TradingView. And actually look at the chart if you want to see, okay, how's structure looking? Is it strong? Is it weak? Because obviously you're going to have to sell at some point. It's not saying to not keep an eye on the project. Absolutely keep an eye on the project. Keep updated. Check the Telegram group. Check the Discord of the project. Make sure the team are delivering. Make sure the community's good. Make sure the chart is strong. Higher highs, higher lows, all that. But you do not need to keep refreshing the stupid little dollar amount of how much you have, because it's not real and it's too volatile for you to deal with. So, cleanse your mind of your peak net worth. Only put in money that you can actually afford to not touch for a year. Right? So sort out the emergency expenses first, and then put in an amount that you can actually not touch. Then don't check your peak net worth. Don't update it. Don't look at the app. Don't refresh it. Check the charts only. And then you might have a chance of actually making it through the volatility to see the big pumps.